Do you know the biggest, worst financial mistake I ever made was getting a car on finance? Like, why did I get a car on PCP finance? Like, I actually don't know why I did it. The first car I ever bought was a Corsa. I think I paid like 2.5 grand and I sold it for like 1,500 standard. It was the old shape Corsa. Then I went and got a new shape Corsa and I pay £195 a month with 0% deposit. So can't really complain about putting a deposit down and losing the instant money. But I now pay £195 a month and I'm going to have to pay a balloon payment at the end of my payments of £195 that I've paid for 4 years. Why did I do that? Why do people, like, why did I finance a car?
Oh my god, car finance is such a scam. Ignore the noise outside, but I've just received this letter in the post, yeah, of my car finance that I'm with. Yes, I do have a car on finance, but the point of this video is the car of itself, it was £11,621, right? On here, there's a 16.90% APR rate on the loan that I took out on the car, right? Its duration is 49 months. So I had another car that I actually part exchanged. So that car was worth £250, yeah. But the maximum deposit I could put on was £5,250. So I actually ended up getting £2,000 back into my bank account, which was good. But tell me why the balance of the car and the loan is £22,852.89. This is for a 2020 Corsa Elite sat-nav car, well, I think it's called that, I don't know. But tell me why the loan literally doubled when the car itself is only worth 11,621. That is mental. Like, if I had the money, I could have bought 2 cars outright. So tell me why me taking out a loan is costing the same amount as a car. What the fuck? And I've only been paying it a year, right? So after the deposit was put on for 5,000, it went down to 17,602.89. So for the full year, I've been paying £229.48 every single month. So I've still got £15,078.61 left to pay on this motherfucking car. Oh my god! And the car itself isn't even worth that much. Like, driving in the UK is a scam. Never mind the car itself, but driving is a scam because you've got to pay fucking insurance on top. Yeah, I could have kept my other car because I did buy that one outright, but that one was also £11,000. Oh my god. And the fact is, I got that first car first because in my area it's so hard getting automatic cars. Like, they're never in stock, or when they are, they go so fast. And that was the one that was like around my budget. That's why I got that one. But if I waited a little bit longer, I could have got this one outright and I wouldn't have to pay for another fripping car on top because the interest of the loan. That's mental.
Girls, I'm begging you to think twice before getting a car on finance or leasing one. There are so many hidden costs that you just don't even know about in the small print, and it's probably the last thing that you're thinking about when you are getting your brand new spanking car. You probably just want to sign everything, hand over the money, and drive away. But there are so many hidden costs, and a lot of the contracts are for only 4 years, and after the 4 years, you have to give the car back. And the condition that they expect the car to be back in, yeah, it's going to cost you money. So I'm sitting with this Tesla now that I need to give back in a month's time, and it's going to cost me about £1,000 to be compliant with their checklist. And that's £1,000 that I didn't really realise or look at until the last 2 months when they contacted me to try and get me to re-sign another contract, take out another Tesla for another 4 years. And to be honest, I'm never ever going to be getting a finance car ever again. I would rather have a push bike. I'm never ever ever doing it again. I've done it so many times and I can't tell you how much more free I'm going to feel without having a car on finance anymore. I just don't even care. I think I'm over it completely. Like, yeah, I fell into the trap. You know, I can drive this flashy car, but what? Like, I'm paying so much money for this car, I might as well live in it.
I made when I was younger. One of the biggest mistakes I made when I was younger, yep, you guessed it, it was buying a car on finance. Now I know I'm not the only one who's been there, and that's exactly why I'm making this video. So you can learn from my mistake before making the same one. Buying a car on finance is a serious commitment, but a lot of young people justify it by saying, you know what, it's fine. I'm grown now, I'm adding some responsibility to my life. But the reality check is being 18 to even 20 is not grown. You've just finished your A-levels or college and you're either heading to university or chasing your dreams. Financially, you're just getting started. And what a lot of people don't realize is that car finance comes with a lot of strings and really tight ones. Let's say you finance a car worth £30,000 on a PCP agreement with 10% APR over 4 years. You put down a £3,000 deposit, so you're financing £27,000. Now with PCP, you're not paying off the full £27,000 monthly. Let's say the car's future value after 4 years is £13,000, so the part you're repaying monthly is £14,000 plus interest at 10%. At 10% over 4 years, your monthly payments will roughly work out to £355. That's £355 times 48 months, which gives you £17,040 paid only on monthly instalments. If you add the original deposit of £3,000 and if you want to keep the car at the end, you've got to pay the balloon payment, which is £13,000 in this case. You've paid £3,000 plus £17,040 and an additional £13,000, which equates to £33,040. That's £3,040 more than the car was actually worth, all because of interest, and we haven't even talked about insurance or road tax and even maintenance. It also gets worse. That car is still losing value. By the time you're halfway through the finance term, you're paying full monthly installments plus interest. The car might already be worth much less than what you owe. That's how people end up with negative equity. Don't jump in a flashy car just because you can finance it. Look for a car with decent mileage, good history, and most importantly, within your budget. So if you're thinking about buying or selling a vehicle, or you've got any questions about finance, drop me a message. I'll help you make the smart move so you don't learn the hard way like I did. One of the biggest mistakes I made when I was younger.
They wanted to teach you they would, but they won't, so I will. You want to know why cars are so expensive and how despite that people are still able to afford them? If you've just taken out a car on finance, know someone who has, or you're thinking about it, you're going to want to sit down for this one. You see, in school they never taught you about loans, how they work and how they might affect you in the short and long term. They never taught you how to spot a good deal or know when you're being absolutely shafted. And that's exactly why PCP car finance is most likely going to lead us into a financial crisis.
Hold up, wait a minute. Something ain't right.
You might think I'm being dramatic, but I'm not. Hear me out. If like me, you look around and you see people with 40, 50, sometimes £60,000 cars, even though you know that they don't make the kind of money that's necessary to afford those cars, the chances are they bought it on PCP. PCP is a personal contract purchase and is the payment plan of choice for 80% of all brand new cars sold in the UK right now. As we speak right now, there are 6.2 million PCP contracts active in the UK. And the way that they work is instead of buying the whole car, you put down a deposit, which is usually a percentage of the whole value of the vehicle. You then pay for part of the car with interest over a period of time, usually between 24 and 48 months. At the end of the agreed payment period, you then either pay for the rest of the car through something called a balloon payment, or you just hand the keys back to the dealership and walk away. What we're seeing with PCP and cars is exactly what we saw with mobile phones when contracts were first introduced. This is when iPhone pushed up the price of mobile phones dramatically and started dropping one every year. And I mean, it works. All of us think the iPhone is overpriced. So instead of paying the £1,000 or however much it costs, instead what we do is sign up to pay £70 to £80 per month for 2 to 3 years. Then do it all over again when we upgrade. Now, by packaging it in a monthly contract, not only can telephone companies sell the phone to those who could afford it anyway, but they can also sell it to those who couldn't afford it by making it seem affordable, but in the long run, they're paying a lot more for the phone. This means that the phone companies sell more phones and have a steady stream of income every single month. It's how companies can increase their sales and get away with increasing the price of their products without the consumer feeling it so much. But ultimately, it's robbery. If you think about it, it's genius, but not helpful genius, evil genius. And you might think, yeah, okay, that was phones, but cars have always been expensive. Surely PCP is a way to help make those cars more affordable for people. And you would be wrong. Car prices over the last 10 years have pretty much doubled and no one is talking about it. Take the VW Polo, for example. Everyone loves a Polo. German engineering at its finest, perfect for a new driver. The Polo since 2012 has increased in price by over 90%. Yeah. In 2012, a brand new Polo would have cost you just less than £10,000. But in 2022, that same Polo would have cost you a little under 19,000. Or let's take the Ford Fiesta. In 2012, you could have picked one up for £9,795. As of 2022, that price had increased by over 82% to just under £18,000. The reason being that those high prices would drive people into taking cars out on PCP rather than buying it outright, which is way more profitable for car companies. And do you want to know why they let you use any equity that you still have on your PCP car at the end to use a deposit for a new car? That is for two reasons. One, it's an easy way for them to sell you a brand new car and tie you in for another 2 to 4 years. And two, because they can now sell the car that you've just returned to someone else, probably on a PCP deal, and make twice the amount of money out of the same car. Where it gets scary is when you think about how much people are paying for these cars every single month. Most people end up paying between £300 and £700 a month, which is between 15 and 30% of your average monthly wage. That is close to the price of most people's mortgages. And when you look at the interest rates, they're absolutely crazy. They start at 8% and go as high as 17.9%. And if you're wondering how this is going to cause a financial crisis, it's just a repetition of history. The thing is with PCP creating £40 billion worth of debt every year is that if people don't pay, the banks are going to be in real big trouble. You remember the 2008 financial crisis where the American banks were giving out mortgages like sweets? And then when people couldn't afford those repayments, everything went up in flames? Yeah, that could happen over here because of these cars. And you know who's going to have to bail out those banks, right? Yeah. That's me and you. It doesn't help that we're about to enter a colossal recession and there are 6.2 million PCP contracts out there. So yeah, let's make good financial decisions.
In case you don't watch the news, we are in the midst of the worst car market crash we've probably ever seen. And if you're gonna go buy a vehicle right now, there's 3 things that I need you to do to make sure that you don't get taken advantage of by the dealer. Thing number 1, I need you to go over to cargurus.com and pick the make, the year, the model of the vehicle that you want. Find the one that's been on the lot for 60 days or more. That's step number 1. Step number 2 is you're going to ask that dealer once you get there if they're a volume dealership or an independent dealership. Now, the odds are that they're a volume dealership, and what that means for you is that dealer doesn't give a crap about the price of the vehicle. All they care about is getting those vehicles off the lot. You're going to have so much more room to negotiate. You are going to get thousands off of MSRP on that vehicle. Now, step number 3 is your financing. Get a pre-approval. Get one from your credit union or from a bank, your personal bank, or the manufacturer financing directly. Don't work with the dealer. Work with the manufacturer directly. And here's the reason why. Because dealers will try and gaslight you and manipulate you into thinking that you need a down payment. You don't need a down payment. I have not put a down payment on a vehicle since I was 18 years old. I am now 44. Unless your credit is absolutely in the trash, you do not need a down payment. Get a pre-approval, because once that lender says you're pre-approved for X amount, they're not going to ask you for a down payment. They're going to give you the full financing for the vehicle that you want.
So many people are stuck in car finances and they don't even know how to get out of it. Just because you've signed the agreement over a certain period of time, it doesn't mean that you have to be stuck. Let's just say you've got a PCP or a HP over, let's say, 4 years, and you want to change your car in the next couple of months after buying the car, then you can do that. All you need to do is get a settlement figure from your finance company, then look on Auto Trader and see what your car is worth online. Let's just say the settlement figure is £19,000 to clear your finance, and let's just say your car's valued at £20,000 on Auto Trader. So all you've got to do is hope that you're not in negative equity. Put the car on Auto Trader, and whoever buys the car, they need to either pay you into your account and you pay the finance company off direct, or they just pay the finance company off direct. Once the settlement figure is paid, finance company will email out clearance to prove that there's no longer finance outstanding on this vehicle. And also, if you've got equity in your car because you put down a big deposit or you got the car at a good price, so let's say the settlement figure's 19 and the car's worth, let's say, £26,000, then the remainder £7,000 after they cleared the settlement figure is yours. So you've got that money there now to use towards your next car or whatever else you need it for. But if you're in negative equity, because you bought the car at a high price or your interest rate was so high and you put on a little deposit, etc., etc., or you bought a car during COVID times when the car prices shot up, then you're stuck because let's just say the settlement figure's £20,000, but the car's only worth, I don't know, 16 or 17. Then you need to cover that £3,000 to £4,000 shortfall out your own back pocket. And there's a lot of people who have got car finance debts outstanding for a car that they no longer have. So, for example, they had a car went into an accident, or the car was lost or stolen, and the insurance didn't pay out, or the insurance only paid out a certain amount, and the customer's left with the shortfalls. If the car's worth 20 and the insurance only paid out 10, for example, then the customer is liable to pay the full £10,000 back. And if the customer doesn't pay that amount back, then they'll get chased for it and the debt will go to a debt collection company. So for anybody that's in negative equity, get in contact with me.
Car finance is probably the biggest money mistake that you will make. So I know there's way worse money mistakes, I'm sure, but this is a little hidden and so many people don't think about it that I want to share my perspective with you to see if I can convince you of the same. Firstly, you spend way more with credit than you do with cash or debit. It's been proven by Harvard Business School. And so we know that. But the weird thing about car finance is the price is positioned monthly. So you really are not thinking about the gross price, that the full big price that's charged to you. Most of us would not know if we leased a car, really, especially maybe on the day, but days later, what we've actually paid for it. If someone says, how much was your car? You'll probably say the monthly price. Am I right? So we've already overpaid for an asset. Next up, the car company makes profit twice when you pay on finance. Firstly, they make a profit on the car because there's a margin in the car, but they also make profit or commission on the finance. This is why they will not really give you a discount if you came along with cash and were like, can I get a deal with cash? Maybe like years ago, and they were not going to tell the taxman about it, stuff like that. But these big companies, no, like they don't really want cash. It's like actually a hassle for them, and they make less money because they don't make the margin or commission on the finance. So they want you to do car finance. No one talks about the interest rates as well, and so people think it might be 0% or it might be cheap, but it's not. It's much higher typically. Less than 5% of car finance deals in the UK especially are actually on 0%. So if you see a big shiny 0% in the window of the car garage, it's for like next to none of the cars in there. It's maybe for one. Okay, now we're going to move on to you. A car finance payment takes up a big part of your budget. We are talking mortgage and then car finance payment. And so it's such a big part of your budget going to something that goes down in value. These cars decrease in value. They do not go up over time. At least your mortgage is paying a loan on a house that kind of grows in value. And even if you don't have a mortgage, if you rent, at least you're kind of renting a roof over your head. You can't really, well, you shouldn't really sleep in your car. So if we think about it like this, that it's a big part of our budget and our income is the biggest thing we have to help grow our financial well-being and ultimately grow our wealth, that car finance payment is holding us back from using our money to put into things that grow. And whilst there's loads more I can say on this, what I will close on is it's also a cycle. Like, are you going to do this forever? Will you always have a car finance payment? Are you going to see it every month payment out? Are you going to do this over years? Are you going to just keep trading one in and keep upgrading? Are the two of you in the household, are you going to have two car payments forever? Because that doesn't sound like fun to me. And it also sounds like lots of missed opportunity to invest that money into the market, into property, into yourself, wherever. I think it's the combination of these things that makes me feel it's just one of the biggest mistakes that people can make. But let me know if you agree.
I owned this car for literally one day. Okay, you guys, the past 2 days of my life have been so insanely stressful, and let me tell you why. So I bought my car. Woohoo! Yay! I didn't even get to really like enjoy it because the financing and like all of the contracting part, they fucked me so hard. They messed me up so hard. I didn't realize how bad the refinancing contract was, blase, blase, blase. I didn't realize any of these things until, of course, I call my father and I tell him, like, I'm all excited. I'm like, oh, they did this and this. And my dad's like, what? Basically, they signed me up for gap insurance, didn't need it. Honestly, guys, I can go back and forth about how shitty the contract was, but luckily there's a 2-day canceling like contract fee. So instead of buying this car that I was so excited to do, I am no longer buying this car, and I'm here at Mercedes-Benz right now and I'm dropping it off. I owned this car for literally 1 day. I'm just gonna trade it in, forget the contract, whatever, and in a few months I will be getting into a new car. And I say a few months because we have some life-changing things coming up that you guys don't know about yet, and you guys will know very soon, and then you will understand why it is not smart for me to get into a vehicle right now, okay? So stay tuned for that. But yeah, long story short, I feel like I really try to do what was best financially. I was like, okay, I'm gonna buy this car for the low, and then I'm gonna sell it and I'm gonna flip it, whatever. It was not that simple, and it was never that simple, and I'm just a girl. Walking away from the situation, I can say that I learned a lot and what not to do moving forward, so I am blessed and grateful for that. But I'm really not liking Mercedes-Benz right now, or like the people at this exact location, because of how they went about things. They literally played me. Anyways, I'm here. Let's drop it off, whatever. I brought Pumbaa. I brought him today for some emotional support. Come on, Pumbaa. Let's go. I have officially arrived with my special guest, Pumbaa.